What's up, everybody? This is Titch for Block Smarts. Today, we're going to be talking about lessons from the dip. What did we learn from this dip? Okay, so like I always say, use every opportunity you can in this market to learn everything. The lessons aren't going to come taught like I'm telling you now. They're always going to come from observing as well. So you have to absorb it and use that as lessons. That's how you're learning, right? I learned about dips as well. Like I'm just reiterating things that I've learned as well, and I'm just kind of like bringing this to you to say, this is. Did you notice this? Did you notice that? Because it's important for you to be observant as well if you want to be successful and gathering your conviction as well. So what did we learn? Right. First of all, no one can predict the market. Okay, it is a bunch of sentiments, and you can't control global factors. Things happen. Okay, we all thought that Bitcoin was going to at least hit 100K by December. I was one of them. I definitely thought that we would by December. It didn't. It doesn't discount Bitcoin to say, well, Bitcoin is crap. It's just that things happen, and like I said before, there's a lot of manipulation that's been happening in this market, and the price is being played with for many reasons, like I mentioned in the previous video before. So we couldn't predict it. We thought that it was going to go there, but it didn't. There was a stock to flow as well that has been correct for a while, and it didn't work this time. It wasn't correct this time. So we can't always predict the market price for price. We can do like long-term predictions to say, well, Bitcoin's going to hit 100K, like milestone predictions. It's going to hit 100K. Yeah, sure. We believe that because of the value of the asset. So short-term predictions and things like, oh yeah, now next week it's going to definitely do this, and next week, oh yeah, it's going to do this. Nah, but even sometimes the long terms don't check out. But that's not to kind of like dishearten you to say that it's a bad performer. It's just what the market is. Like I said, it's a bunch of emotions. People that are investing because they think it's going to go up, and then they might receive some news, and then they decide, oh wait, I'm going to take my money out. And there's so many factors that kind of like determine what happens with the price. So don't rely on those kind of predictions. Rely on the asset itself. Don't rely on someone saying that a coin is going to do 100K. Nah, understand the coin. Why would it do 100K? Okay, that's what you need to know, not just a price prediction, because some people are biased, and in this market as well, some people are sponsored to basically shout coins out and shill these coins, and they might just be pumping that coin. So don't always take those predictions. Take them with a grain of salt. Okay, so that's one. Secondly, is that the market doesn't go up in a straight line, guys. Even in a bear market, when it's going down, there are times that it actually does come up. So these things don't happen in a straight line. Understand that, and so understanding that actually helps you digest crashes. They happen. As long as you're in a good asset, you shouldn't be panicking just because something crashed when it was on a trajectory to go high. Usually when you actually zoom out, you realize that it's still within trend to go up. So understand that. If we're saying that Bitcoin is going to hit 100K, it's not going to be doing like 40K, 42K, 44K every day, accumulating until it gets to 100K. It's going to do 44K, come back maybe to 40, dwindle around there a little bit, maybe do a little wick down to 38, and then go back up again, and then maybe chill. It's going to be a choppy ride, right? It goes back to what I'm saying again. Just understand the assets so you know how to manage this volatility, right? And as I say, the volatility is the price we pay for the returns, right? So just understand that and keep that in mind. Now, lesson number 3 is do not FOMO and buy in the green, right? FOMO is bad. And the reason why FOMO is bad is because we see crashes happen and retracements happen. You buy in the green when it's expensive, and then it retraces to a much lower price, and you don't have any more money to buy it at a lower price, right? When a coin is gone, it's gone. Just let it go. They usually retrace, and you'll get it cheaper anyway. Just be patient. It goes back to patience again. Wait for it to retrace and come back, and then you buy it. You never. There's a lot of people that FOMO'd in at around 50 something K. But look where Bitcoin is at, what the price is today. They would have been able to buy it at 40K. So that's definitely a lesson. And then also, don't sell in the red, because the price is going to go up. Now, look, if you've got a good coin, a good fundamental with good fundamentals and everything like that, why are you selling it just because it's retraced a little bit? I mean, it's going to go back up. We see this all the time. And like I'm saying, like nothing goes up in a straight line. It's going to go back up. So just be patient, keep holding, and your returns will, you'll get your returns. Okay? That is a very, 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 very important fact. So, what's next? Stick with the sound strategy, right? If you have a sound strategy, which is to buy, hold, and dollar cost average, just stick to that. Don't get thrown off when the market retraces. And I'm only saying that regarding good coins, right? If you buy a crap coin that you know yourself is crap, no fundamentals whatsoever, yeah, if I had done that myself, I would panic when the price is going down, because I'm thinking, this might go to zero, because it's not backed by anything other than just rubbish, basically. It's just a cute little dog coin or whatever. I would probably sell as well. So if it's a good coin, listen, stick with your strategy. Keep dollar cost averaging and building up your portfolio and your position, and you'll be good, right? And so another thing that I learned is that Bitcoin is the granddaddy. If Bitcoin goes down, the whole crypto market will come down with it. And usually the smaller coins actually go down even lower and worse, right? Why is that? Well, it's the biggest coin. It's the most held coin in crypto, right? Okay, so there's a lot of money that's kind of like in Bitcoin, and it kind of carries the sentiment of the market. So if Bitcoin is going down, if people lose confidence, they lose confidence in the others. So you can imagine someone losing confidence in Bitcoin, which is the granddaddy, they're going to lose confidence in the others as well, because they're going to be coming down harder. So that's just how it works. But it works differently. It works the other way around as well. That if Bitcoin is going up, all the other coins are going to be going up as well. So that's something to know. It's it holds the largest market cap in crypto. So it kind of like carries that space. It's one of the original, one of the longest surviving. So it's earned its position, and that's just what it is, right? What else? What else did I learn? Don't predict the bottom to try and leverage. What happens with a lot of the people is that when a coin crashes, so they immediately think, oh great, it's crashed. So now if I leverage trade and I put high leverage, I'm going to be able to make mad gains because this is the bottom, right? So they put high leverage thinking that, that's the bottom. It's not always the case. Sometimes what happens with these coins is that they hit that bottom and then they retrade, they start to go back up, but then they come down again and sometimes even lower, and then you're going to get liquidated. When prices crash, the safest strategy is to buy good coins at a cheap price. You're better off leverage trading when the trend is now establishing that it's an uptrend and it's going up. When it's choppy like this, listen, you just never know what can happen. Okay, so always try and be and play it safe, and don't try and kind of like give yourself unnecessary risk. Okay, yeah, I think probably that's everything that I wanted to talk about. I don't know. What did you learn about? What did you learn in the dip? So it's still going on, but hey, what did you learn? And if you haven't learned anything, it's just because you haven't been observing. Try and observe next time and see what you'll learn. Yeah. All right. This is Titch for Block Smarts. Peace.